Hey everybody, it is Mark Coe for the 1st of June. Can't believe we're into a new month. Almost half the year down at this stage of the game. As we get to end of June, that'll be our half the year. It's gone by quickly, 2017. And steady as she goes in regards to equities. Um, Ship is pointed in one direction, and that's to the top side. So looking at anything in the E-minis other than top side right now has just been kind of a challenge. I wanted to focus your attention to something I think would be really beneficial. I deal with a lot of short-term retail traders and something that comes up quite often, but I wanted to point out something that I think would really establish establish people in a better direction, especially when focusing on the short term. And I'm a big fan of looking at the 4 hour to try and get this guidance. So if you're really short term in nature, I think just going out bigger time frames can provide a little clarity. And I understand when you're looking at daily, weekly, monthly type charts, you're not going to have the ability to deal quite as frequently. But 4 hour charts will actually give you several weeks of looking at charts, just kind of what comes into your focus there. But what it really does for you is it shows you the areas where buyers and sellers are battling. So I have crude oil up here, and I want to reference a couple recent moves in crude oil. And so understand when I do my levels analysis, the levels are always derived from some point in the past. And so we know where we're looking before it ever happens. And I'll give you an example. So this is April crude oil. April we start to break down. We broke down from the 54 level. Pretty big selling on the 19th of April. And what I'm looking at are consolidation zones. That's where I'm pulling the focus from. So I'm taking this consolidation after a breakdown, and I'm marking this zone for a future a point in the future. And that's all I'm doing. I'm carrying it across. And you can see this point that I mark does not have any relevance after we break through here on the 20th of April until you come back a month later. But look at what happens when you come back a month later. From this exact level where price breaks down 51.70s down to 44, so $7 move, that exact level. The next time into it, and this is where you focus on, the ability for the market to either take it away from the level to the buy side or refuse that level and go sell side. So the market has the opportunity here. It tries to get buy side. It tries to move away from it, and it's instantly rejected. Now this is around OPEC, so there's some news there, but it was still the level, right? Still the level, because after all, the release was not bearish. It was just the release was as expected. So the next level that comes into focus after this break, there's an area down here around 47.70 to 48 that comes into focus, and that is pulled from the consolidation lows around the 11th and 12th of this month. So just a couple weeks ago, or sorry, last month, May. And so the low on this consolidation is 47.70. That's the low on this candle, the 12th of May. And so this is the zone I'm grabbing. And I'm grabbing that 47.70, right? And I'm pulling that across. Oh, I think we grabbed from the wrong one. This is what I'm trying to reference, this 47.70. And so that 47.70 pulled across looks just like this. This becomes your zone. So understand a couple things on the approach into this zone. At this stage, unlike the top, this was very bullish into this level. This was a little more bearish into this level because price has already visited here a week ago. It's already been down in this section a week ago, and you see the result. It traded to 50. It's now back in here twice this week, and you're not even getting those 50 rotations. But understand, it's the level that's deciding it. So we looked at this trade this week in the room and looked at it from a standpoint of who gets pressured where. And the comment was that below this zone, if you spend a decent amount of time below 48, you're going to start to get longer term buyers pressured. We talked about it today as the market rotated up to 49, the ability of short term. But the thing is, what you have to realize those are bigger picture things. So if you're short-term scalping, day trading, you can do yourself a lot of favors by dealing in this area. So let's think about it. I'll take it down to a 5 minute. We'll look at the ability between 51.18 and 74 on the top, and the ability between 47.70 and 48.30 on the bottom. And look what that looks like. But you're doing your work on a longer time frame. Do your work on a bigger picture, then take it down. Don't start your work on a 5 minute, because then you don't have the frame of reference of what the market actually did at those levels. You just see it from a momentum standpoint. So this is 5 minute charting. Okay, same exact market, crude oil, 5 minute charting, 47.70. And the only reason I'm picking yesterday is because that was the first day back into that level. This level could have been on your screen for a lot longer. I'm just showing you what it looked like as it traded there. So this is the trade into 47.70. It traded a low of 73 yesterday, right around lunchtime US. So there's your rotation back out of it, rotation back in. So what the market is telling you is that it will not push it lower at this stage of the game. Right? It will not push it lower. But the ability to deal on that on a tighter time frame, which is what a lot of short terms focus on, they're really nice rotations when they rotate away. And that's what I'm going to open your eyes to, is the ability to look at this. So I said I would look at the top one too. This was from Thursday. This is Thursday action in crude oil. So yeah, up here at 52. So the level was drawn 51.14 to 52. That's where the level's drawn. 51.14 to I think it was, sorry, it wasn't 52. It was 51.78. That's where it was drawn. So 51.14 to 78. And we'll see what that looks like. 51.14 to 78. So that's the zone. And so look, it even spends a few minutes above that zone. But once it rejects it and really moves away, your ability to sell the tap back to it. And so when you're constantly looking for trade away from those zones, you're going to trade from a much more powerful position. So what I'd like to stress is to have you do your work on the longer term. Make certain you're familiar with what's going on in a bigger picture, especially if you're going to focus on the short term. The day trade, come with a power position to understand what levels are actually moving in versus chasing the 2, 3, 5 tick momentum type stuff. Because the idea is that you're finding the bigger swings when you're going out on a longer term chart. So for 1st of June, it is Mark Coe, and cheers. I will speak with you all soon. Thank you.